Hi, everyone, and welcome to our interview session with Tim Lawless. Tim is the head and founder of the research division of Kورلاجیک, previously called RP Data. We know when it comes to property data, Kورلاجیk is an absolutely unrivaled guru. Tim is a household name in the sector, and undoubtedly, a lot of our followers will be excited to get his insights. Let's say hi to Tim. Tim, thanks so much for your time.
G'day, Shapour, and thank you for inviting me along, mate. It's great to be able to engage with the Persian community through your channel.
An element that shapes the supply-demand equation to a large extent is consumer confidence. In a world inundated with uncertainty, both globally and locally, due to Russia's invasion of Ukraine, imminent rising inflation related to supply chain bottleneck and rising oil prices, recent floods, property cycles turning point, and sluggish wage growth, what can be inferred from data related to consumer confidence now, Tim?
Well, consumer confidence is really important for housing markets. We talked about it a little bit earlier on in the interview. And just to reiterate that, if you look at there's a couple of really, I suppose, high-profile consumer sentiment measures in Australia. You've got a weekly measure from ANZ and Roy Morgan, and you've got a monthly measure from Westpac and the Melbourne Institute. They both tend to show the same trend. One's a bit more high frequency, and the monthly measure goes into a bit more detail. Probably not too surprisingly, we've seen these measures peak or move through a recent peak in around about April of last year. And that period actually coincides with the peak rate of growth in housing values as well. And as sentiment has gradually reduced, we've also seen the rate of housing growth reduce. We started to see more recently less market activity. Markets like Sydney and Melbourne have seen a reduction in market activity through the March quarter compared to a year ago as well. So sentiment is really important. And as you said, Shapour, there are so many things that flow into sentiment. It's kind of like the aggregation of what's happening in labor markets, what's happening with interest rates, what's happening with household finances, what's happening with credit trends, all in one index that measures how consumers are feeling, right? So remember, buying a home in Australia, you're generally looking at least, say, $500,000, more like $1 million if you're buying into Sydney, or about $700,000 if you're buying into Brisbane to purchase a home. It's a really big decision. You need to be confident about your own finances and your ability to service your debt before you're going to make a decision like that. So the fact that we're seeing consumer sentiment now on a pretty steep downwards trajectory is bad news for housing activity. It does suggest to me that we'll continue to see this softening trend across the housing market, probably less activity. But for buyers, that's good news. It means there's going to be less competition in the market. We're seeing listing numbers starting to rise now as there's less competition, and also more vendors taking advantage of the strong growth they've seen and probably looking to sell as the market softens. So while sentiment is really important, it probably flows in quite clearly into both the level of housing activity in the marketplace and, more importantly, what happens with housing values over time.
Tim, back to the question of affordability. I know articles are being written, have always been written, speeches have always been made, but is anyone ever practically concerned and planning to do anything about the affordability issue in Australia? Well, the flip side of the recent boom, the property boom that we just experienced, was worsening the affordability issue. Is there a magic bullet for this escalating problem at state or federal government levels, or even local council? I mean, does anyone have a quick solution for affordability issue in Australia?
Well, there's a few things being done, but probably not enough. And I agree with you. This has been talked about a lot by the government, by industry, by consumers, and nothing really seems to happen, at least anything meaningful. So what we generally see from, say, the federal government is addressing affordability by helping more people get into the marketplace. We talked about the first home buyers deposit guarantee, for example. That helps first home buyers get into the market by saving less of a deposit and not having to fund lenders' mortgage insurance. We also see the government handing out some grants, say a first home buyer's grant to a first home buyer. So if you're buying generally a new home, so it has to be a newly built home, then the government will give you, I think at the moment it's about $7,000, but maybe it's different from state to state, some money to help you get into the marketplace. Or it may be the case that some state governments might provide a relaxation or a concession on their stamp duty rates. These are all measures that help to get more buyers into the market. It doesn't do anything about addressing the underlying issues of what's causing housing affordability in the first place. So housing affordability being as challenging as what it is really simply due to the fact that housing prices have risen much more than incomes over a long period of time. You can see it just in the last year. Incomes in Australia are up about a little bit less than 3% in a year. Housing prices are up a little bit more than 18%. So there's a clear disconnect there. That's an extreme example. There isn't a silver bullet. To go back to the second part of your question, this is a multifaceted issue that requires a really multifaceted response. We need to see, more supply. We're starting to see that thanks to home builder, but we probably need to see that having some longevity rather than just a 9-month program that stimulates housing construction. We probably need to see more infrastructure investment. As we talked about with the bullet train, if we had better transport infrastructure that connected up areas that were really affordable, it just helps people to base themselves in areas that might be a little bit more remote, but still get back into where the jobs are. If we had more jobs based outside of the major capital cities, that would be another really good start as well. Seeing the federal government or the state governments taking the initiative there and basing major government departments in some of the major regional centres would be a pretty good start as well. There's a whole bunch of other things around town planning and zoning that could help things as well. Higher densities are probably required. If you look at any global city around the world, try to find one that's got a detached house overlooking the CBD itself, like we have in Sydney, for example. They just don't exist. So Australia has very low density, high quality housing. We probably need to accept that another way to improve affordability is to densify along strategic areas. That means densifying along transport spines and in areas that are close to major working nodes like hospitals, CBDs, satellite cities, universities, that type of thing.
Speaking of the government, we know that the federal election is looming in the horizon. And I would like to know whether the federal election would have any effects on the property market. And are any major parties sort of putting forward policy modifications that might influence the market in unprecedented ways, in ways that we never expected?
We are seeing a few announcements coming out now in line with the federal budget. Of course, we did see some announcements from the current government. And as we approach a federal election, which will probably be almost guaranteed sometime in May, we'll probably see more announcements relating to housing leading up to that. Both political parties in Australia, both of the major political parties, are both addressing or acknowledging that they want to see more home ownership in Australia, that there is a housing affordability challenge. And, the policy announcements we've seen to date are exactly what we've just been talking about. They're getting more buyers into the market, particularly first home buyers, by giving them a bit of a leg up. So the federal government, for example, has expanded their first home loan deposit scheme, which is the one we talked about, where if you've only got a 5% deposit, you can get into the marketplace and the government will guarantee your loan for you. That's expanded out from initially 10,000 spaces to become 50,000 spaces under the current federal government. We've also seen some announcements around providing more of those spaces into regional markets and being quite flexible around the pricing caps, so that the home value caps that these schemes can be used for. So we're definitely seeing more announcements, but nothing really strategic. They still seem to be very much putting a bit of a Band-Aid over the issue rather than actually addressing housing affordability. But hopefully, as we get closer to the election, we do see some more strategic announcements.
Well, sure. We hope more is to come. Looking at the current data, are transaction numbers tapering in most suburbs in the country, despite the fact that we know the market is well segmented? And as always, we say we have markets within markets in Australia. From a transactional activity perspective, comparing this month's sales with those of the last year, what can be possibly inferred about the market now?
Yeah, I'll look at the quarterly numbers. They're a little bit more stable than the monthly numbers. And it's important when you're looking at property data in Australia, there is a bit of a lag in getting the full set of transactional data coming through. So we try to estimate the number. And through the March quarter of this year, nationally, so a bit of a macro view, we saw about 14% fewer sales compared to March of 2021, or the March quarter of 2021. But in saying that, we're still seeing home sales well above average. It's just down from last year. We saw a peak or a record level of housing sales over the 12 months to January. And since then, they've started to turn. So it's pretty clear that over recent months, we are starting to see a slowdown in transactional activity, but it's not consistent across the market. Markets like Sydney and Melbourne have seen the most visible reduction in activity. They're obviously the most unaffordable markets or the most expensive markets to be buying into. They're also markets that have quite a demographic headwind against them. It's where a lot of people are leaving those cities to move to regional markets or move to other states. So in Sydney, for example, we've seen about a 39% reduction in the number of home sales through this March quarter compared to last March quarter. Melbourne's down about 27%. Then go to somewhere like a Brisbane or an Adelaide and sales activity is up over the quarter. So we're definitely seeing a lot of diversity, which really comes down to things like affordability, demographic trends, some of these regional and livability trends that we're seeing as well. So long story short, it looks like Sydney and Melbourne are currently wearing the brunt of a slowdown in housing activity, whereas the smaller cities are generally much more buoyant. Probably will start to slow down as we see interest rates rise. I don't think they'll be immune from that, but not as sharply as what we're seeing in Sydney and Melbourne.
So what we can see what we have seen in Sydney and Melbourne in the last 2 months or so, you reckon is a turning point, not the fluctuations, ups and downs in the market. So it's a turning point as you see it, right?
Yeah, absolutely. This doesn't look like volatility to me. We've been seeing this easing trend since about April of last year in the rate of value growth. And that's been consistent. It's been consistently slowing. And as of the past couple of months, it's just tipped into negative month-on-month growth. So if it was something moving from, like 5% growth down to negatives, then clearly that would be volatility. This is absolutely just the extension of the trend we've been seeing for nearly a year now. So it doesn't surprise me at all that we've started to see this weakness emanating out of the two largest cities.
And at the same time, I sometimes find it so hilarious to see property spookers on different social media platforms. Speaking of looming, highest property boom in 2022. So we're not expecting any booms this year, are we?
No, I think we're well and truly through that phase. Last year, absolutely, we saw a significant boom. Seeing prices rising by more than 20% across most of the capital cities, I think it's pretty fair to say that was absolutely booming conditions. But growth conditions are slowing pretty much everywhere now. There's a few exceptions. We're seeing some momentum gathering in Perth after that market weakened quite substantially as state borders closed. That's rebounding now. Regional South Australia looks to be rebounding a little bit as well. But even the really strong markets like Brisbane and Adelaide look like they've moved through their peak rate of growth and are just gradually starting to fade a little bit now. So a lot of diversity, but the market is cyclical. It goes through growth phases. It goes through down phases as well. And pretty important everybody understands that prices don't always rise. There's plenty of evidence that most growth phases are followed by some level of a downturn.
Yeah, perhaps correction. So what we have seen in Sydney, Melbourne, Brisbane, Adelaide is the softening of the market proportionate to a lot of other factors. How about weaker markets like Perth that you just mentioned and Darwin? Traditionally weak markets like Perth and Darwin. I have seen these two full of, with a bunch of surprises in the last year. They go up, down, and there are different underlying elements, definitely. But how do you see the market in Perth in the coming months?
I think there's probably some decent upside in the Perth market. It's it's Australia's fourth largest city for starters, and it's the most affordable capital city to be buying into. As you say, Shapour, Perth and Darwin both went through a very long downturn between about 2014 all the way through to, only just recently Perth has actually staged a nominal recovery. It was like last month. So we're seeing values in Perth pretty much on par with what they were about 8 years ago. So that market's very affordable. It's got a very strong economy because of the mining sector, and we're thinking the commodity sector will probably remain quite strong. It's now got this rate of interstate migration growth that's probably about to bounce back as we see state borders open up as well. So the only thing that's a little bit, I suppose, cautionary about Perth is the economy isn't as diverse as what you might find in Sydney, Melbourne, or Brisbane. It is very much a resources-driven economy over there. There are a lot of transport projects underway, and obviously there's services and retail and so forth as well. But it doesn't have the diversity of other large cities, which makes it a little bit more volatile and goes through large growth phases and significant down phases more so than other markets.
Tim, I can continue this interview for good. I generally enjoyed the smooth flow and the first-hand data you presented here. I hope to be joined by you again in our future podcast. Thanks indeed for your time.
Thank you, Shapour. It was an absolute pleasure to be involved. Thank you.
Thank you very much.